Hey everybody. See, sometimes I can be slightly early. Ah, welcome to the show. Channel members Ivan, Rob, Will, Gaten, Craig, Joy, Aki, Frank, Arturo. Hey everybody. I'm sure it'll take a minute for more people to show up. Ted, hey, good morning. And Rosalind and Larry, welcome also. Welcome to the show. Anyway, 50K challenge right there. First week done. Not a bad shake right there. Not a bad shake. 100% win rate. It wasn't like one trade either. Did several trades. I guess I'm not logged in, so can't show the trades, but there you go. Already on the way. I think we did 7. I'm pretty sure I have 7 trades from last week. Got more trades on Delta, McDonald's, Kraft Heinz, Envio. Trying to remember. I was thinking about putting one on Celsius. So already going pretty good. Now, some numbers. This right here, the actual gain in the portfolio in the account, 0.8% for the week. 0.8% for the week. Now, that doesn't seem like big numbers, right? For 1 week. I was like, yeah. These are boring trades. Kind of boring, but they cranked it out pretty good. 0.8% on the account, though. You start doing the math, that's 55% return a year. At 100% win rate, well, that starts to be interesting, right? Like you don't take any losses, you just keep grinding up. That doubles an account. Now, there's a thing called the rule of 72. I don't know if you've ever heard of this. If you wonder how long it takes to double an account at an interest rate, you take 72 and you divide it by the return, the yearly return. And there you go, 1.3 years. 1.3 years to double an account at 55% return. Well, that's not too shabby right there. This does take into consideration compounding and all sorts of things like that, I think. But, even if it was 1.5 years, like, that's going to be a pretty smoking hot growth right there. So, if you're sitting here chasing big gains on options, but you're taking big losses at the same time, and you go back and look at what you did last year. With aggressive trading, did you make 55% return on your account? If you did, great. If you did better than that, awesome. Keep doing it. If you did worse than that, maybe you ought to consider doing something that's a little more stable, focusing on the gains. So that's what the point of what I'm doing here. I'm building an account that focuses on consistent small gains, and I think it's gonna be really powerful. At least that's that's the goal. All the numbers I run, I'm gonna hit my $50,000 a month goal in about 5 years at the current rate. Now, every bit of money I can push into this account gets me there faster. So I'll be looking for opportunities to find money to push into this account everywhere I can. If you want to donate to the cause, you can click the button down below. You can give me a super chat. I'd appreciate it. Now, I appreciate all the channel members. You all are donating to the cause, and we're on the way. So that is that. Now, everybody's turned really, really pessimistic on the market. And this is by the market ear. This is on Zero Hedge, but it's market ear. Look at this consumer pessimism here. Look at this. Inflation expectations, consumer sentiment. It's at the lowest level basically since COVID. Like even, pushing the lows of 2022 when everything turned pretty sour and then the market turned pretty violently there. We're almost down to there in consumer sentiment wise. We never really ramped back up in a big way. Everybody stayed pretty not excited, I guess you might say. And then inflation expectations, these are the ones that came out last week. We've got the highest level of inflation expectations. It's University of Michigan. You could say it's partisan or whatever, but that's that's a high inflation expectation. I mean, that's higher than any point where we actually had high inflation, and so that's pretty pessimistic right there. Start looking at here. This is Goldman Sachs CEO business optimism. It's at a -10. I mean, we were down here in 2022. We're almost at that kind of level. And we were down here in COVID. We were down here, great financial crisis. We're down in we're down here in crisis levels. You'd think that the layoffs and stuff would be like ramping up if CEOs, this is, CEOs right here. If CEOs were this concerned about the future of business, you can say, oh, it's tariffs, oh, it's this, oh, it's that. Yep, but maybe not. I'm not sure what, it's extreme bearishness. But these CEOs aren't firing people. If they're that bearish on business, why aren't they actually taking action to set the sails for the business conditions? It's kind of weird. Kind of weird when you look at that. And dollar pessimism. We've got people thinking that the dollar is going to blow down to record lows. This is a broad trade weighted dollar index. So this is not the actual dollar. This is kind of like how people feel about the dollar. And the standard down here, level 100. Back in the early 80s when we got the Black Monday, big, dollar was high on this chart, means pessimism on the dollar hate, if you will. We experienced a long duration period of dollar hate at the dot-com bust. Didn't really, it kind of spiked in the great financial crisis, but that was short-lived. But now we're ramping it up. That's 2 standard deviations off of the red line there. I know it's dark, it's hard to see. Can't make it light, sorry. And more inflation, more inflation expectations right there. Highest level, and this is the expectations. That was a 6.7 read last week. Craziness. Earnings expectations. Forward guidance is actually plummeting. Down, down, down. We were pretty optimistic on forward earnings, and now companies are guiding lower. Maybe that's because of inflation, maybe it's not. And analysts getting pretty bearish. And this is market analysts. A big bearish read. That's 22. That's 2020. We're getting down to almost, COVID levels here. Great financial crisis levels. Dot-com bust levels. When we look across there, like that's pretty pessimistic right there. IIAA, this is, traders like you and me that jump in and give their opinion. We're down at people weren't that bearish in COVID, and people, we're at this is the 8 weeks in a row this has stayed down here. This is like the longest period of time it has stayed this low ever on the AAII Bull Bear Index. That's an investor survey. You can go sign up for that for free if you want to, and put your vote in. And even intelligent, what they call it, intelligent investor, hedge funds, bearish. Everybody's really bearish. It's really odd to me how bearish everybody is. And then, specifically hedge funds, pushing it down, lowest levels since COVID, really. Pretty like it's a lot of lots of lots of pessimism. Even the media. Look at the bear market stories. 2020, 2022 really ramped it up. Here we are, kind of coming back down just a little bit as we came off the bottom, but another epic run on. And bullish stories don't really we don't really get big runs on bullish stories. It's back to clickbait. People love clicking on doom and gloom, bad news. It's kind of wild. And then even the U.S. presidential approval dropping down. Started at 52. We're down here. First term, still above anywhere in the first term, basically. Biden's rating dropped out near the end. It's interesting. So there you have it. That's the extreme pessimism in the market. And usually when the market tips it all one way, we kind of do something the opposite. So be careful betting on further downside right now. We need to get everybody off the lows. Even the fear and greed here. Refresh it, get the new we're still down here. And I mentioned before that I thought we would need to dip down in here before we could go back up. It's probably, that's exactly what we did. Went down to extreme fear. We had it a week ago, a month ago. So can we take it back to extreme greed before we can run it back down again? It's a big cycle. Definitely a big cycle. So, alrighty. How do we make money today? Start talking about it. All trading involves a substantial risk of loss. When you do this thing we call trading, you might lose your money. Past performance, not necessarily indicative of future results. Just because I get it right in the past doesn't mean I'll ever get another trade right in the future. This presentation intended to be informational, educational, fun, entertaining. Hopefully you're entertained. Not a recommendation to be buying or selling anything, even though, I talk about trades and I may make money. I may do something in front of you and, make some money, but I'm not recommending you do anything. If you need personal financial advice, if you don't know how to make this decision for yourself, you got to hire and consult a financial advisor. But make sure you trust that person, because really they're just trying to take some of your money and turn it into some of their money. That's the whole game in the market, right? Take some of somebody else's money and make it some of your money. That's it. That's how the world works right there. That's how the world works. Everybody's trying to make some of your money into some of their money. One way or another. Happens in the market every day. Gotta be careful. Gotta be careful out there. Here we are staring down the last couple days of April. Holy moly. Last 3 trading days in April. And we get a couple in May at the end of the week. So as far as stuff happening, we get some Jolts jobs here coming up at 10 o'clock. We get ADP non-farm employment change. That's weird. Why would that come out on Wednesday? That's weird. Get some advanced GDP, employment cost index, advanced GDP price index, core PCE. So these are all weird, man. Why would they come out after the market opens? Something weird's going on. Usually PCE comes out way before the market opens. 8:30. Average hourly earnings. This is the normal monthly unemployment rate jobs report thing. We see how many part-time jobs we added, how many full-time jobs we removed. It's kind of like the way it's been going for months and for years, really. We've been losing full-time jobs, gaining part-time jobs. So should be a little bit of an interesting week. We do have a bunch, when I say a bunch, I mean a bunch of big names reporting earnings this week too, which we're talking about Apple, Microsoft. Let's see, can I pop this out? Let me have it. Yeah, here we go. Microsoft, Meta, Apple, Amazon, Robinhood, Visa, Waste Management, Domino's came out today. Cemex, McDonald's, Wendy's. So Spotify's in here, Coca-Cola's in here, JetBlue, UPS. This week is probably one of the biggest weeks. Between this week and next week, we're going to get most of the S&P 500 companies pushed through and be heading back out of the blackout window. So this is going to be a pretty big week of financial earnings. Got some interesting economic news sprinkled in at weird times. Like, I'm not sure what the PCE coming out at 10 o'clock is. That's weird. Really weird. We look back at last week, the inflation expectations on Friday. This is where these crazy numbers, like, look at that. Absolute wild right here. This is what they expect to happen here. It's the expected inflation. It's a survey, so this is actually asking people what they expect inflation to do. The real CPI and stuff like that is doing this. I guess we'll see on the PCE what happens, but this you know, that's the pessimism coming in there. Like, oh, we expecting some high inflation. So anyway, back to how do we make money. I digress. So I go pull a list in the morning of gainers, things moving up $2 more up in the pre-market, and I pull a decliners list, things going down $2 or more. And lately I've been pulling my setups from the day before. Every day after the market closes, I have a tool that runs on like 4,000 tickers and throws out the list of stuff that's set up for an entry the next market day, which is today. So those will all be potentially tradable tickers. But before we get to that, let's talk a little bit about the market. What we expect. We came up into the danger zone. Highway to the danger zone. We are in that danger zone. Now, the 618 level, just a little bit above us there. 5,600 on the cash index, which just opened. Turning a little bit green after a lot of bit of red overnight. I like it. Look at the giant market oscillators. Just kind of checking in here. This is kind of scary. This is stocks above their 20-day moving average. We're coming up, and we might get up here right as we get into that 5,600 on the S&P right there. So we're probably gonna get a pullback, and this could go all the way to the bottom. Right there after we hit that 5,600 level. So there's probably going to be a pullback. The nature of that pullback will tell us what comes next. I've kind of been talking about that for feels like 2 weeks now, maybe 3 weeks now. So that's what we have on the short-term outlook. Look at the stocks above the 50-day. This still looks like we've bottomed out here potentially. We hung out here. We don't typically hang out for a super long time, maybe up to a month down here, before we go back on a trend looking higher. But this one did double bottom here with a lower low. So we came down, we made a bottom right at the end of the year, moved up, and made a lower low. Did this bottom out? We don't typically triple bottom on this one. It's not, we double bottom plenty times, but we don't typically triple bottom. It's just not the way this, you know, we double bottom several times. You could say that's a triple bottom, I guess, right there. Usually one big dip below, and we're off to back to the top. This is just stocks above their 50-day moving average. So when we're below 20, that's 80% of stocks are below their 50-day moving average, and when we're up here above 80, it's 80% of stocks above their 50-day moving average, 20% below. Those are extreme levels, and we typically oscillate between them. We spend the majority of the time between those levels, but when we get out to extremes, we're tipping the boat. Then we look up higher level, stocks above their 200-day, and we were up here for a while, just kind of churn the top, and now we plummeted back to the bottom. That went pretty quick. Now, are we set to rally back up? Or are we going to double bottom on this one? I have no real preference, no real insight into this. We did grind the top a lot. So we could grind the bottom for a while before we shoot back up. We're at 32 right now. We did dip below down to 15. Usually this is a giant oscillator though. So once we get down to the lows, we typically, sometimes we double dip, but then we work on going back to the top. So bottom, top, bottom, top, bottom, top. So while we could hang out down here, it's likely eventually we're going back to the top. This does take typically a couple of years to go from the bottom to the top. So we were up there. We first broke out March 24, and then here it is in 25. It took a year plus to get back down here. So that's that. Overnight, there's the danger zone. We're not quite there on the futures. Look at the price action here. Not really coming into the market today, just not really super spicy. Kind of drifted overnight, consolidating. Not very clear on the price action. Up. Looks kind of like just a three-wave move, unfortunately. That three-wave move would line up if first move up, retrace, next move up, 57.21 on futures. So right in the danger zone. We may see this spike up and then a retrace. The nature of this retrace is what's going to set the stage for the next move. If we do a three-wave down, correction, if we do this, we are set to potentially rally back to new all-time high on S&P 500. NASDAQ looks very much the same, so basically NASDAQ, yes, if we do a three-wave correction down off the danger zone, we're highly likely to do that. Some kind of rejection. Three-wave, that sets us up for going higher. Now this is if we do something that's more like 1, 2, 3, 4, 5, and then we do a 1, 2, 3, that is a crash warning. Right here. That sets up a potential. If you thought this was a crash over here, we're talking about nasty COVID type of crash if we set this up right here. This would be opportunity to make a lot of money in the market kind of crash on downside. This is very important. If this sets up a 5 down, 3 up, that's dangerous. Very, very dangerous. I really want to see a three-wave off of the high. My personal preference, I'd rather go higher than set up a giant market crash, flush out, but it's sitting here in the chart right now. Nothing's clear. Nothing coming up into this is telling me which way it's going to go. Very, very dependent on if it's a 3-wave or a 5-wave. And size won't matter coming off of there. It'll strictly depend. Do we have a 3-wave or do we have a 5-wave? 3-wave probably going higher. 5-wave setting up crash scenario. Keep coming back. Make sure you're subscribed. I'll keep track of what's going on. Keep you in front of the situation here. And I'll let you know what I'm doing in Discord. Right now I'm positioned for this. I am not positioned for this. I expect this. If this sets up, it's time to bail on a lot of stuff. Can't be any more clear about the warning right now. Everybody clear? I mean, it's not awesome, but that's what we got. That's what we got cooking. Same sort of thing in NASDAQ. Potentially topping out up here. If you've not ever looked at the futures before, I like them because it started trading at 6 p.m. last night and got me overnight action, whereas the cash indexes, they stayed closed from Friday until today and didn't really fill me in on any kind of overnight price action. So while this price action is not clear, I'd rather go with more data than less. Russell here. This is interesting because either it's setting up to do a rally back up in here, or we're going to flush it. Like if the S&P 500 and the NASDAQ turn down in a 5-wave, this thing is going probably down to 1,400. While those crash out, and 2,000 down to 1,400, that's a 600-point run. You can make some money trading IWM, which is what Russell is. Not a bad. I've had this target down here, so that'd be like down here around 130, 140. I do kind of expect this to rally up here while we see the S&P and the NASDAQ going up to all-time highs. So NASDAQ and S&P up here, all-time highs. This one just stop in right here and then turn down. So that's what I'm expecting. There's no scenario where we don't do some sort of major correction right now. How do we get the all clear? There's not going to be an all clear. We're either going up to a new high and then flush down, or we're going to go up to the danger zone and start flushing down. So one way or the other, you have to set your sails for a bigger correction. Oil just hanging with the homies. This could possibly be a 1-2, 1-2. Didn't quite go deep enough on this one to set this breakout up. But if we start above 65, we're probably going to come back up to at least the roadmap line right up here around 70. That's what we got. It's not crystal clear. Very muddy here. And we're hanging out. We're just banging our head right on that resistance. That resistance comes from all the way back over here. That low we set up May of 23, which was the first major low off the high in oil. Oil right there. If you've never looked at CL1 before, light crude, and has potential to flush down to some lower targets if we keep rejecting that high from back in 23. Or low, I mean low. It's resistance right now. Get the words right. Gold still has somewhat of a setup to get a move lower here. It's kind of what I expect to happen. Expect kind of another flush here. Come down to 31, kind of get a rally back up, and then set up a bigger. So we're still working on potentially the A wave. I didn't draw this time-wise. I just drew it diagram-wise. So still looking for move down in here, 3-wave up, find resistance, and then get the final correction out here. Now, it's possible we just flush, and this goes way faster, and we just kind of flush right down here. That's also possible. No, a lot of people don't think it's going to do that. A lot of people saying we're going to 5,000. That's exactly the reason we're going to probably do a big correction. Bitcoin. I want to see this break through that 618 level. We had the high back here in January. We had this low we just put in a couple weeks ago here in April. We're at the 618 retrace already. Kind of like the danger zone on ES and NASDAQ. If we can push through, see some upside. 115, 120. That's kind of the next upside resistance area. I've been talking about that upside resistance area since we topped out back here in January. I would expect it to pop up there. Then we probably retrace, maybe retest this area here, and then go on the final run. This would do this if ES and NQ can actually break out and go higher. So we may experience, like if they top out in the next couple of days and we get kind of a market flush out, we may see this retest the roadmap line before we can come up through. So that might be what we see happen if these do a correction off the danger zone. Nothing's moving very fast here. NASDAQ sitting underneath that consolidation we did in March. It's not very positive. If the next flush out takes this below that price action we had right there in early April, a couple weeks ago, this thing is probably going on down back in the triple digits. Lose about 50% of its market cap. NKD firing off alerts, coming back up through this low right here. I want to see this come on up, get through the roadmap line, get through this resistance, and set up the move higher. This is a proxy for global liquidity. As the Japanese stock market gets excited, usually we see the rest of the market, U.S. markets go with it. Dollar. Everybody's expecting doom and gloom on the dollar. I'm kind of thinking that we may have bottomed out here with the 618 level. This big rally we did from the low back here in late 2020 to the high we made right up here in 22. We're kind of at a 618 level where we could bounce and potentially push this up here 120, 130. That would kind of be where I expect this to top out up in here. 130 to 140, kind of the ideal spot right up there. It's what it looks like we're set to do. Checking in on Apple, reporting earnings. I figured I'd just run through the Mag 7s because everybody kind of likes that. Right now, resistance right here, 618. And I mean, it's like almost just like ES and NQ. Since Apple is majority of those, or a large percentage of those, right in there, 225 of major resistance. If we can push on through, probably go make a new high up here around 273, possibly even up to 280. Be pretty spicy on Apple. Amazon, same kind of deal. A little bit more separation. We have the roadmap line here. We have the 618 here. And this feels like we missed the bottom there. So we have not come back up through, made higher highs yet. Even though we broke out, we may do a little retrace that could take us down, possibly even to a lower low. Google reporting smoking earnings, just blowing out everything, but not really, on the stock chart, not really a runaway freight train, you would think, for just absolute obliterating earnings. We're just kind of churning right here. Potential 3-wave up, roadmap line. That can result in a retrace. Very cautious here. Do you have that resistance there and the resistance there? And that's why there's a giant orange box that we have to get through to go higher. Meta. Same kind of situation. This had its lowest low right here, though. So is this finished on the downside? And we're getting ready to cook some upside here. Still downtrend highs. We haven't made any new, we haven't made a higher high yet. Resistance right there at the roadmap line, and then up here at the 618. If we get through all of that, we set up the odds, we're going up higher. I still think this is kind of long-term bullish right there. This stock would be easy to double its market cap compared to some of the other stuff out here. Look at infinite market cap, 8marketcap.com. Gold sitting here at 22 trillion. Apple sitting here at 3 trillion. And it's the only $3 trillion company right now. Microsoft dropped below 3 trillion. Nvidia down to 2.6. Amazon down to 2. Alphabet down to 1.9. Bitcoin at 1.8. Silver at 1.8. Those two hanging out together quite a bit. They moved up from way down here at number 10, 11. Vanguard, a lot of people think SPY is the big ETF, but really VTI and VOO, that's crazy. I wonder why they did that. VTI and VOO, these two are bigger than SPY. SPY comes out down here, right there. So Spider, as far as amount of money involved, down here at number 23. I'm going to trade something bigger, more stable. VTI and VOO. For the S&P 500. It's kind of fascinating, I think. Meta comes in at 1.3. Back to the conversation I was trying to have. That could easily go to 2.6 and still not even be in the top 4. That's just wild. So it could easily double and not have to do anything crazy. Apple, on the other hand, doubling. For Apple to double, that has to go to $6 trillion, $6.2 trillion. Where does that much money come from? I don't know. We added 14, we added like $1.4 trillion to the stock market in one day last week on Friday. So we could add money to Facebook. You could add 1.3 trillion to that, 1.4, and be up to 2.6. So that law of big numbers is what I call this, or the rule of big numbers. The bigger the numbers, the harder it is for it to double. When they're down here in the billions, you could double this pretty easy. You can double some of these pretty easy. And they don't even have to get up in the top 10. So that's where your opportunity sits. Not necessarily all the way up here. If you're trying to go for bigger gains. Doubling your money, doubling a stock or something like that. You don't want to hunt in the place where it's difficult. Microsoft, very sloppy chart at this point. We did an Echo move down though. Echo Trades was the first thing I launched as a guru. This is the concept of Echo right there in the market. Move down, equal in size. Usually I'm looking, bullish Echo Trades. I'm looking for moves up, but this was an Echo in the market going down. Bottomed out. So potential to set up a reversal here. If we reject off of this or this, probably setting up a bigger correction in Microsoft. This one's still looking rough here, Nvidia. This one doesn't, while Apple, Amazon, Meta, and Microsoft all report earnings this week, Google last week, Tesla last week, Nvidia doesn't report earnings until almost out in June here, end of next month. So we've got a ways to go. And this is a big downtrend of highs. We're under the roadmap line. We're under the 618. still making lower highs. Be very careful. This can dip right down here in the 70s. Been talking about that since back here last year. We have this downside potential. And if we don't hold the 70s, this can go down to the 40s. And that would hurt a lot of people. Where does the money from Meta come from? Possibly flowing out of NVIDIA. Be careful. This one coming up into the roadmap line. Resistance, if we get through. Our next level up, hanging out right here at this 380 380, 390 level. That'll be the next upside resistance. We get up through that. Big upside targets. Talking about 527, 562, potentially all the way up to possibly even 600 to 700. Then I think we may get a pretty major top in Tesla, and we'll probably experience downside for quite a while. So I think we're going to top out for a while. Now, this can all happen on the excitement of their Cybercab product, which is different than the Robotaxi product. They made that clear in the earnings call last week. That Cybercab is like the app and the software and the rideshare. Robotaxi is the actual vehicle that they're producing. So they're saying that anybody with a car right now that has full self-driving can put their car into the app, potentially, as they roll it out. That's pretty spicy. Spotify set up the move to come on up here. This fired off back here last week. Wait for that to go up. Now, there was a question over the weekend in Discord about these setups, these daily setups that I've been going through, that I hadn't really made me think of it slightly different. So I've talked about the duration and, how long, how they work, how likely they are to work. We've talked about the statistical advantage, going for ones that have 30, going for the ones that are profitable over 80%. And if they're below 30, that means they don't have a statistical population. You have to fall back on the average that I've done of, 50,000 trades that I've gone back and back tested and logged. And the historical win rate is like 75% when we go from, when you've got the high and the low, you get the close above the 618, 75% for that move right there on the historical win rate. Now, if you have one that produces better wins, like, this one doesn't have a statistical population, but 80% and 5.9. That's pretty spicy. Something like McDonald's, we got 42 trades. That's a statistical population, better than 80 and better than 2. Like, that's the stuff I'm looking for. Now, the question came in, what's the duration, right? The average duration across 56,000 trades is like 45 candles. Now, any one of these tickers may be longer or shorter. And if they've got a bigger than 30, that's a statistical, population that tells you that that trade typically moves slower. That ticker typically moves slower. I throw those statistics into Discord for Termite Trading Lab members. But the question was, on the average, how long does it take these to work out? And the average across 56,000 trades is like 45 candles, roughly. 45 trading days. But then it was like, well, if I was buying options, how much time would I need? I was like, well, now we're moving into a conversation about standard deviation. And the standard deviation on the trade on 56,000 trades is 35 days. So if you wanted to encompass 68% of the time that you would not run out of time, you would take your 45 standard candles, and you would add 35. And that would bring you to 68% of the time, you won't run out of time. All right, that's when, I always talk about, maybe you want 3 times the average. That's the average. There's your standard deviation. So when you're just 2 times the average, you're you're in 70% of the time, you're going to be fine. 30% of the time, you're going to run out of time. Now, when we add a second standard deviation, we bring this up to, we go from 68 to 95% of the time. And if we add a third standard deviation, this is just statistics, we bring this up to 99.7% of the time. So if you wanted to be almost sure, you still have like 1 to 2% of the time you run out of time. Almost sure you need to have this much time built into your trade. And that'll cover 99%. And this is number of candles, so it doesn't matter which time frame you're trading on right here. So that's a little longer than most people were looking at. That's actually 148 days, basically. 148 trading days. Remember, trading days are candles. If you're on a 1 minute chart, that's 148, basically 148 candles, 148 minutes. That'll help us 99%, but that still leaves the possibility to run out of time. So if you're trading on something like this and you wanted 148, you have to go on out here. Right there, 148. That's 213 actual calendar days to ensure that you wouldn't run out of time based on the standard. Now, McDonald's may run faster historically, and you could make your decision there. So hopefully this helps time frame on some people. I know there was questions in Discord over the weekend that, they'd never thought about it with standard deviation, and the fact that you would 3 times the standard deviation would give you, 99%. And that's also when you're using other tools like Bollinger Bands, and you see the moves and you see a poke out, those are 90, when you have a 2 standard deviation Bollinger Band, 99 or 95% of the price action is going to stay within those Bollinger Bands. When you do a 3 standard deviation Bollinger Band, you've got 99%. So you're in a 1%, actually in a less than a 1% exceptionalism, and that's more likely to reverse hard, but it's also more rare that price would do that. So it's one of those things, if you're trying to use these tools, you got to spend some time to understand kind of some of the statistics behind the tools. So if you're using my tool, I try to make it as easy as possible, and we just hunt for these setups. This is why I consider them very high probability, and why I have money on Microsoft, or why I have money on McDonald's this week. So looking at some other potentials that are set up, we had BHF, and this is actually, it actually found this high to that low right there. This is already in a trade, or it was in a trade. It stopped out. So this one's been a little choppy, a little marginal on the numbers down here, but that sets up the potential right there for 63. I don't know if I would take that one. BIV, I like the best of the best stuff. Like I said, the criteria I'm looking for, total trades over 30, profitable trades over 80, and profit factor over 2. So this one, it's back down to the standard. There's the entry. Got the high, got the low. It's been pretty flat. 78 potential. Booking die, yeah. So we've got a couple of different highs in play here. I think the software probably picked up that one. Yep. For a 54.28 target. If you wanted to go for the even bigger move, be up here at 5,500. And you can see this one tends to be choppy. We're almost to a statistical population. Now, for those of you that have market roadmap, go listen to the update. I talked a lot about the statistics too in the update. So if something I said here today is confusing, go watch that market roadmap update for the week. Maybe something I said there clarifies it a little bit. As we get close, only 3 trades to a statistical population. 3 trades is not gonna, even if these next 3 were all winners, it's not gonna flip this over 80%. and it's not going to flip this to a giant winning profit factor. So this trade right here kind of might lose your money on the average. Charter communication. I bet you it picked up that one. This is the real one. 429.50 target. Chewy. There's the entry, target 41.95. Only has 2 trades in the history. You can flip a coin twice and get heads. Pretty easy. So I wouldn't read into these statistics very much. Lean back on the historical. Historical 75 and 1.28. That's be what I expect out of this, since this is not a population. Docu. It would have picked up that tiny swing right there. I'd probably wait for this one to set on up, actually. My setup finder is looking for a very aggressive kind of trade, short time frame. This one looks like it might be a bigger picture time frame. FHI, high to low, kicked it off, 42.66. IMO. I'm not liking the downtrend of highs here, but 76, 47 trades in the history. Basically, that's good. That's in line and right at the statistical average. This is light. That at 1-to-1, basically you make 1 penny for every dollar you lose. You come out 1 penny ahead. So this is kind of a choppy ticker, not really a big trender that makes you money on the upside. And LBRDA, Liberty Broadband. Here's the high, here's the low, and 91.70. LBRDK. Here's the high, here's the low. Look for 91.85. NXT. There's the high, there's the low. Well, the finder found that one. I'm going for this one. I'd wait for a close above this level right up here. So a lot of marginal setups are in the list from Friday. It's my evaluation here. PBA, got the high, got the low. There was the entry. Target, be right up here. 41. Rivian. Choppy stuff, downtrend of highs. Doesn't make me feel good. Not at all. I'd be looking for this to close up here to get that move. SANM. Here's a reasonable one. High to low, closed above, getting a little retrace, but 94.70 target. It's reasonable. Still, 5 trades short of the statistical population. Kind of have to lean back on 75% and 1.28, which is right in the neighborhood where we are. SPFI. Yeah, that one's gonna. I'd be waiting for a close up here. Aggressively, you could take that trade and look for this little pop to 36, but I personally would be waiting for a bigger move up. 37, look for 42. SPMO, another reasonable setup here. There's the entry, target up here, 106. There you go. That's all the ones on the finder this morning. Looking at the decliners. Usually we can find some opportunity looking at decliners. Lily just pulling back a little bit. This has the setup for going on up here. 1,000 is the upside that fired off last week. DPZ, that fired off back here, and highly likely to get up to 500. Target up there. SAIA, we were seeing trucking get kind of whacked on all the news from, less port traffic, less stuff coming in the country, less imports, less trucking, potentially maybe has some more downside to go. FUTU, if we can bust through, could have some upside. Target's been in place for 136. ABGO, and we've got resistance coming up here. So this is important to watch, like what happens next on this move. It's a kind of a three-wavy thing right now. We've got to get through here and push it on up here. If we do that and that, then we're highly likely going to go on up to the target up there. Alrighty. And BA fired off. Looking for that 192 on BA. This one, 45 trades, but lower than, this one does lose more than it wins. You only make back 44 cents for every dollar you lose. Not the best trade to put my risk at. Risk on right there. All right, everybody. I'm going to go check out what's on, what's cooking. I'll be on Discord. If you want to come join me, links in the description. It's like $5 to buy the market roadmap. You can get that video I was talking about with more talk about the statistics and stuff. And I'll be back again tomorrow. Same bat time, same bat channel, 9:15. We'll do it all over again. Look for more awesome trades, more opportunities in the market. Have a great day. Stay safe out there. Your account is your own responsibility, and nobody's going to keep it safer than you do.